Hello. So we are continuing with the same sessions on discussing about accounting concepts. And now we are to discuss another important concept on accounting, also referred as conservatism principle. Now, before we start discussing about this, let's understand what's the objective of preparing the accounting records. The accounting records are prepared to understand how much profit or loss the business has earned over a specified period. We've discussed in the previous sessions that you first define a period, and in that period match the revenue with the expenses and apply the accrual principle. The entire process has been done to understand what? To understand how much profit or loss the business has earned. Now, who wants to know about the profit or loss for the business? Yes, there are various stakeholders. Who are the stakeholders for the business? Now, the stakeholders may be shareholders. There can be one shareholders. There are lenders. There are future investors. There are analysts, right? So there are credit rating agencies. Even the government, they want to know about the performance of business. So these are various, maybe purchasers. So who are the purchaser or buyers, or maybe vendors? So these are the people who are basically the stakeholders in a particular business, and they want to know how this particular company is doing and how this particular firm is doing. Now, in the same concept, what should be the logical thing should be? That is, if you are anticipating any kind of losses, then company or firm must disclose. That is, if you are anticipating any potential loss in a business, all those potential loss, any potential losses, any losses one company is anticipating, all those losses must be mentioned in the financial statements. However, if you are expecting a potential gain, or you are anticipating that there will be some gains in the future time, they need not be reported. So you're not supposed to report any possible gains which may or may not happen. But if there is a possible loss, then those things need to be reported. Why? Because as a company, you want to give a conservative picture of the profits to the different stakeholders. Let the stakeholders make decisions for doing transactions with you on a conservative numbers. One should not inflate the numbers and show a very rosy picture to all the stakeholders, and tomorrow they may suffer loss. And that's the reason why if a company is anticipating any kind of loss, that loss need to be reported in the financial statements. However, if a company is anticipating any gain, that is not required to be reported. And therefore, we will see later on in these sessions that there is also a concept of provisions. What is the need of provisions? That is, I am anticipating that if my sales have happened and credit sales have happened, I may not be able to recover my full sales. Therefore, I take provisions, what is called as bad debts. That means my debtors may not pay me some amount of money, and therefore I am taking provisions for it. Similarly, there is also a concept of contingent liability. Now, what is a contingent liability? Contingent liability means a liability which is still not has happened, but it may happen. An example of this is a legal case which a company might be having in the court. Now, if a company loses this case, they might need to pay some amount of compensation to some vendors or to some other party. This may be a loss to the company, and this may become a big liability. Now, this may happen, may not happen. But since it is a potential loss, or it may a potential liability, it need to be reported in the books of account in the accounting statement. Again, because we are following a conservatism principle. Now, it also means to say that, for example, the valuation of inventory, when I'm doing this, I need to report the inventory value at a lower value. That means you have the cost price of inventory, you also have the market price of the inventory, and whatever the lower value, that value has to be recorded in the inventory valuation. I will not inflate the inventory valuation. Why? Because I want to give a conservatism picture to the stakeholders. And therefore, if the inventory value is going up, the market value of the inventory, so let's take example, in the stock, I purchased the stock worth rupees 10,000. Now, the cost of the stock is 10,000. The market price of the stock maybe become 15,000. Therefore, I will report the value of the stock at 10,000. Let's take a vice versa. Let's take a vice versa example. The cost of the stock is rupees 10,000, which is the same as the previous one, but the market price of the stock is rupees 8,000. Now, under these circumstances, I'll report my inventory at this value, which is I'm always giving a lower or a conservative picture to my stakeholders and not the higher or bigger rosy picture. So this is what the conservatism principle is. The theory, the logic behind it of using this principle is that let the stakeholders make decisions on looking at the darker side. They should not be present a brighter side of the things, because as an individual thing, if I take a decision based upon the darker side, tomorrow the things come out to be good, it's always good for you. But if you take decisions, and if somebody is showing a very rosy picture, you start taking decisions based upon the rosy picture shown to you, and tomorrow the things may turn out to be bad, then you may curse yourself that why have you transacting with this company. And that's the reason why the prudence which has been adopted by the accountant is that you must follow a conservatism principle. That means if there is any loss, if there is any discount, if there is some which expenses were about to happen, one must record. But you cannot anticipate, you cannot record the future gain which may or may not come in the organization. So this is an important principle which gives the stakeholders to take informed decisions about investing or doing transaction with any business. I hope you have understood this concept. We'll continue this in the future sessions. Thank you.